I need to tell you the most uncomfortable truth about this business. If you are failing at trading, it is likely not because you aren't smart enough. It is because you are too smart. I see this pattern constantly. Doctors, engineers, lawyers, successful entrepreneurs, people who have conquered every other challenge in their lives through sheer cognitive power, come to the markets and get absolutely slaughtered. They read every book, they understand the math, they can code their own indicators, they analyze the macroeconomics perfectly, and they lose money consistently. They lose because the very traits that made them successful in the real world are the traits that destroy them in the markets. In the real world, being smart means you solve problems. It means you find the answer. It means if you work harder and think deeper than everyone else, you win. But the market is not a problem to be solved. It is not a puzzle with a hidden solution that only the high IQ people can find. The market is a mirror. And when smart people look into that mirror, they don't see the market, they see their own need to be right. Let's walk through why your intelligence is becoming your biggest liability. The first trap is the illusion of complexity. Smart people love complexity. They trust complexity. Throughout your academic and professional life, you were taught that complex problems require complex solutions. So when you come to trading, you instinctively reject the simple. You look at a simple support and resistance strategy or a basic trend-following system, and your brain says, it can't be this easy. Everyone knows this. If everyone knows this, it can't be the edge. So you start building. You add indicators. You look for correlations that no one else sees. You start trading order flow combined with lunar cycles, combined with fundamental data from 3 different central banks. You build a system with 50 rules, because a system with 50 rules feels robust. It feels intelligent. It feels safe. But I need to tell you why you are losing money. You are losing because your trading system has too many rules, way too many. Under pressure, when the market is moving and money is on the line, you cannot execute 50 decision points correctly. It is impossible. A strategy without structure is like an airplane engine without wings, but a strategy with too much structure is a prison you cannot move in. I learned this the hard way after 8 years of struggle. The best system isn't the most complete system, it's the most executable system. And executable means simple, brutally simple. The smart trader creates a system they can only follow when they are calm, rested, and focused. But the biological reality is that you will be tired, you will be stressed, and you will be emotional. A simple system protects you from your worst self. A complex system requires your best self, and your best self does not show up every day. The second reason smart people fail is the addiction to pattern recognition. Your brain is a high-performance machine designed to find order in chaos. In your career, this served you well. You saw trends before others did. You connected dots that others missed. But in the markets, especially on lower time frames, most of what you see is noise. It is algorithmic chatter. It is retail panic. It is randomness. But because you are smart, your brain refuses to accept that it is random. You stare at the 5-minute chart and you start seeing patterns that aren't there. You convince yourself that this wick combined with that volume spike means a reversal is imminent. You are not trading the market, you are trading your own hallucinations. You are overanalyzing to the point of paralysis, or worse, you're using your intelligence to rationalize bad trades. This is the close enough trap. You have a setup, it requires 5 specific criteria. A dumb trader looks at the chart, sees only 3 criteria, says no, and walks away. They don't think about it. But you look at those 3 criteria and your smart brain starts working. You think, well, the volume is a bit low, but the context on the 4-hour is strong. And really, this is a variation of the pattern I saw last week. You talk yourself into the trade. You use your high IQ to build a sophisticated argument for why you should break your rules, and the market punishes you for it. You lose not because you didn't know the rules, but because you were smart enough to invent a reason to break them. This is the difference between knowing and doing. You have the knowledge, but you lack the biological discipline to simply say no and sit on your hands. This leads us to the third and perhaps most painful reason, the need for stimulation. Smart people get bored easily. Your brain craves engagement. It craves a challenge. But here's the cost of reaching the elite level in trading that most people don't expect. Trading becomes boring, deeply, profoundly boring. The excitement is gone. The adrenaline is gone. You see your setup, you take it, you manage it, you exit. Routine, mechanical, emotionless. For a high-functioning, intelligent person, that boredom is unbearable. You didn't come here to be a robot. You came here to conquer the financial world. So when the market is quiet, when there is nothing to do, you sabotage yourself. You start taking scalp trades just to feel something. You start trying to predict tops and bottoms because waiting for the trend feels too passive. You prioritize entertainment over profit. I have seen traders who can analyze a chart better than 99% of the population. They can tell you exactly where the price is going, and they end the month negative. Why? Because they couldn't sit still. They couldn't handle the empty space between the setups. They were addicted to the action, to the puzzle, to the feeling of being in the game. But the market rewards patience, not activity. It punishes the need for stimulation. And finally, we have to talk about the ego, the identity of being smart. If your entire life you have been the person who is right, the person who figures it out, trading will destroy you. Because in trading, you will be wrong. A lot. You can do everything right, perfect analysis, perfect entry, perfect risk management, and still lose. This is a probability game, and probabilities can work against you to a degree that seems impossible. For the smart person, a loss feels like an insult. It feels like an error code. You think, I must have missed something. If I just study more, if I just analyze deeper, I can eliminate the losses. So you go down the rabbit hole of trying to be right every time. But being right doesn't matter. Being smart doesn't protect you. Certainty is a delusion. And until you accept that, truly accept it in your bones, you cannot move forward. You hold on to losing trades because taking the loss means admitting you were wrong, and your identity cannot handle being wrong. You move your stop loss because you're convinced the market will turn around, because your analysis has to be right. You turn a small, calculated loss into a catastrophic blow-up because you're protecting your ego, not your capital. The professional trader doesn't care about being right. They care about executing their edge. They know that a loss is just a business expense. It's just data. It says nothing about their intelligence or their worth. But you are letting every red candle attack your identity. So how do you fix this? How do you stop your intelligence from killing your account? You have to dumb it down. You have to surrender the part of you that wants to be the genius. You need to build a system that is so mechanical, so binary, that your intelligence cannot interfere with it. You need rules that are yes or no, no maybe, no it looks like, no I feel. Does the higher time frame support this trade? Yes or no? Can I say yes to this setup in 3 seconds or less? Yes or no? Is my stop based on structure or fear? If you have to think about it, the answer is no. This is the clarity test. If you are using your brain to debate the trade, you have already lost. The trade should scream at you. It should be obvious. You need to transition from an identity of solving the market to an identity of executing a system. You are not the architect every day. You are the bricklayer. Your job is to lay the brick perfectly over and over again. It is boring. It is repetitive. It is not intellectually stimulating, but it is how you build wealth. You must accept that you know nothing. All that analysis you did, meaningless if the timing is wrong. All that confidence you had, unfounded. The market is teaching you the first brutal truth. You are not in control. You never were. The only thing you can control is yourself. You can control your risk. You can control your reaction. You can control your ability to sit in uncomfortable stillness. Most smart people quit because they cannot conquer this knowing-doing gap. They know what to do, but they cannot lower themselves to simply doing it without questioning, without tweaking, without interfering. They die in the stage of sophistication, never reaching the stage of simplicity. If you want to survive, you have to kill the ego that needs to be recognized as smart. You have to become someone who is okay with being wrong. You have to become someone who values discipline over cleverness. The market doesn't reward the smartest traders. It rewards the most disciplined traders. Be disciplined, not smart. Discipline wins every time. Trading is a mirror. It is showing you that your intelligence, which saved you in the outside world, is the very thing preventing you from surrendering to the flow of the market here. Look in the mirror. Face the arrogance that thinks it can predict the future. Face the impatience that thinks it is entitled to profit just because you did the work. Stop trying to outsmart the market. You can't. Just follow the rules you set for yourself. Sign a contract with yourself to be a robot in execution and a human in life. If you can make that shift, if you can humble yourself enough to be simple, then you have a chance. But if you insist on being the smartest person in the room, the market will gladly take your money and give it to the person who was willing to be bored.